11th Standard Accountancy, Chapter-3, Illustration-7 number 7. Anand is a trader dealing in textiles. For the following transactions, past journal entries for the month of January 2018. So, Anand is a trader who is dealing textile business. In the month of January, he deals 10 transactions is given here. Let's read the transaction, that is January 1 commenced business with cash. 2 purchased goods from X and Co on credit. 3 cash deposited into bank. 4 bought a building from L and Co on credit. 5 cash withdrawn from bank for office use. 6 cash withdrawn from bank for personal use of Anandu. 7 towels given as charities. 8 shirts taken over by Anand for personal use. 9 sarees distributed as free samples. 10 goods tablecloths used for office use. So what they asked, they have given some transaction related to Anand textile business. They asked us to pass the journal entry. Whose book is this? Anand book. So before we are going to pass the journal entry, we need to write the heading and format of the journal entry. The heading is whose book is this? Anand book. So in the heading is we have to write in the books of Anand journal entries. The format contains, the journal entries format contains 5 columns, that is date, particulars, LF, debit and credit, rupees. Okay. Let's pass the journal entry, what they given in the transaction. Okay. The first transaction is January 1 commenced business with cash 70,000 rupees. What is meant by commenced business? Commenced business means started business with cash 70,000 rupees. Okay, what are the accounts are involved here? Cash account and another account means started business with cash 70,000 means invested cash 70,000 rupees for started business. Okay, investment means capital. Okay, what is meant by capital? Money or money's worth invested by the owners for the company, that is called capital. So Anand contribute capital to start the business. Okay, so what are the accounts are involved here? Cash account and Anand's capital accounts. So whenever you start the business, cash 70,000 is comes into your business. Okay, because you contributed capital. So cash 70,000 comes means cash comes under the asset account. So asset account increases. Whenever cash comes into your business, your asset account increases. Whenever asset account increases, asset account is to be debited. Why asset account is to be debited? Because of cash increased, cash comes in. So cash account is to be debited. Dated on 1st January 2018, cash account debtor 70,000 rupees. In the name of capital, because Anand contribute capital to start the business. So Anand's capital, whenever capital account increases, as per the format of the journal entry, whenever capital account increases, capital account is to be credited. So to Anand's capital account 70,000 rupees is to be credited. Narration is commenced business with cash. 2nd January purchased goods from X and Co on credit rupees 30,000. So Anand purchased goods from X and Co. On what basis? Whether it is cash basis or credit basis? On credit basis, Anand purchased goods from X and Co for 30,000 rupees. While Anand purchased from X and Co, he didn't pay any money. But he promised to X and Co, he will pay later. Okay, so X and Co is the creditor for 30,000 rupees. Anand is the liability for 30,000 rupees because Anand didn't pay any money while purchasing. Anand made purchases on credit basis. So X and Co is the creditor. Anand is a liability. Whenever liability increases, liability account is to be credited. Okay, so is the liability, so how much rupees? 70,000, 30,000 rupees is to be credited. Who is the creditor? X and Co is the creditor. Okay, so whenever you purchased goods, it is a expenses for you. All the expenses is to be debited. Okay, so purchases accounted are 30,000 rupees to X and Co 30,000 rupees, because Anand purchased on credit basis. X and Co is the creditor, so X and Co is to be credited. Okay, credit purchases made. 3rd January, cash deposited into bank 40,000 rupees. What are the accounts are involved here? Cash account and bank account. Two accounts are involved here, cash and bank. Listen carefully. Cash and bank both are comes under the asset account. Okay, current asset account. Okay, so you have 40,000 cash in your hand in your business. Then you deposited that cash into your bank account. Okay, so your bank account increased 40,000 rupees cash you deposited into in your bank account. So your bank account increased. So bank account comes under asset account. Okay, so whenever bank account increases, asset account also increased, right? Asset account also increased. So whenever asset account increase, it is to be debited. Okay, so bank account is to be debited. On 3rd January, bank account debtor 40,000 rupees. You deposited cash, so your cash goes out from your business. Okay, so your cash account decreases. Whenever your cash account decreases, your asset account also decreases. Whenever asset account decreases, it is to be credited. Why asset account credited? Because cash account decreased. So cash account is to be credited. Okay, so to cash account 40,000 rupees. Cash is the giver, bank is the receiver. Debit the receiver, credit the giver. Cash deposited into bank. Then 4th January, bought a building from L&Co on credit rupees 95,000 rupees. Listen, bought a building means what? Asset. Okay, whenever you purchased asset, you have to write the name of the asset. Okay, so asset account debtor. Asset is always, whenever you purchased asset account is to be, you have to write the name of the asset. Okay, so how can you made purchases on what basis? On credit basis or cash basis? You purchased asset on credit basis. Okay, to whom? L&Co. While you purchasing asset from L&Co, you didn't pay any money. You didn't made any payment to L&Co, but you promised to L&Co you will pay later. So L&Co is the creditor. Okay, so L&Co is to be credited because L&Co is a creditor for you because you made credit payment, credit purchases. Okay, so L&Co is the creditor. So L&Co is to be credited. You purchased what? Building. Building means asset. So whatever you purchases, it is an expenses. So always expenses is to be debited. So building account is to be debited. Building account at 95,000 rupees to L&Co account 95,000 rupees. Building bought on credit. Listen. So you purchased on credit basis. So you are the liability. Okay. To whom? To L&Co. Whenever your liability increased 95,000 rupees, your liability increased. So whenever liability increased, liability as per the format, liability is to be credited. Okay, on the other aspect, liability is to be credited. So L&Co is to be credited to L&Co account. Okay, then 5th transaction, cash withdrawn from bank for office use 5,000 rupees. What are the accounts are affected here? Cash account and bank account. Both are comes under the asset account, right? So you withdraw cash for what? For office use. Okay. So from where? From bank. So your bank account increases. You withdraw cash from bank. Why your bank account decreases? 5,000 rupees from your bank decreases. So whenever your bank account decreases, it is your asset account also decreases. So whenever asset account decreases, it is to be credited. So asset account means bank account is to be credited. You withdraw cash. So you have 5,000 rupees cash in your hand in your business. So your cash account increased. So whenever your cash account increases, your asset account also increases. Asset account, as per the format, asset account increases, it is to be debited. So cash account is to be debited. So cash account debtor 5,000 rupees to bank account 5,000 rupees. In other aspect, bank is the giver, credit the giver. Who is the receiver? Cash is the receiver. Cash is the, so debit the receiver, credit the giver. The narration is cash withdrawn from bank for office use. The next transaction is 6th January 6, cash withdrawn from bank for office personal use of Anandu 4,000 rupees. So what are the accounts are affected here? Listen, whenever you see the word personal use, you have to use the term drawings. Okay, so drawings is always debited. Drawing account is to be debited. Drawing account is a kind of expenses account. All the expenses is to be debited. So drawing account is to be debited. Drawing account is a kind of expenses. All the expenses is to be debited. So drawing account debtor 4,000 rupees. From where you withdraw the cash for personal use? From bank. So your bank account decreases. Whenever bank account decreases, asset account also decreases. As per the format of asset account decreases, it is to be credited. So bank account is to be credited to bank account 4,000 rupees. Bank is the giver, credit the giver. Okay. So the narration is cash withdrawn from bank for personal use. Then 7th transaction is towels given as a charity 3,000 rupees. So, towels given as charities like as a donation. Anand runs textile business. Who donates towels or who donates charity towel to orphanage or old age, etc. Okay, old home etc. for free. He charity for free. He charities towel for free. Anand did not sold towel. He given towel as charity. If he sold towel, then he received cash for sale of towels, right? But he given towel as charities. It cannot be returned in the name of cash. He provide or given towel as a charity. So listen, as per the business point of view, whenever you purchased goods or sold goods or taken goods for your personal use or given goods as a charities, then you have to mention that product as the goods, not mention as the towel, saree, like that. Okay, you commonly mention that product as the goods. Okay, when will you use that product name? Yes, you can use that product name where the name only when you purchased asset. Whenever you purchased asset, you have to mention that product name. Whenever you sold asset, only you can use that asset name. That means what kind of asset are you purchased or sold? For example, you purchased a building. It's an asset. You mention building, furniture, etc. Okay. Listen, on dealing textile business, all the textile products what he had with him, that and all textile items are for the purpose of sales only, right? So the towels goes out from his business, right? So in the name of what? In the name of charities, not for sale. It has been done here in the name of charities. So charities account debtor. Okay. So charities account debtor 3,000 rupees. The goods goes out in the name of charities. We can't mention it as the sale. Why? Because the goods given as a charity. Okay, so we have to show the purchases account. So purchases account is to be credited. So to purchases account 3000 rupees. Why we written charity account on debit side? Why because charity is a kind of expenses, right? All because the goods, the towel goes out, it's a kind of expenses. We can't get cash return for that towel. Okay, so the goods goes out in the name of charity only. It's a kind of expenses. All the expenses is to be debited, so charity is accounted for. Then why we credit the purchases account? Because we can't enter sales account on credit side, because purchases related goods only goes out. Okay, so purchases account is to be credited 3000 rupees. The narration is goods given for charities. Next, shirts taken over by Anand for personal use 12,000 rupees. Same, Anand dealing in textile business. Okay, so whatever he taken from his textile business, whether it is shirts, pants, towels or saris or whatever it is, we consider it, or we mention these items, these product commonly called as goods. Okay, commonly called as goods. Okay, listen. So Anand taken goods for his personal use. In first transaction, in previous transaction, we Anand taken goods for charity. Okay, then he taken goods for his personal use. Okay, so then that this and all related goods related to purchases account, right? Here he taken goods for his personal use means drawing account. Okay, drawing account is a kind of, drawing account is always debited, and a drawing account is also a kind of expenses. So all the expenses is to be debited. So drawing account at 12,000 rupees. And if you taken it cash for personal use, you have to enter to cash account. If you taken cash from bank for your personal use, you have to write here bank to bank account. Bank account is to be credited, cash account is to be credited. But here you on the taken shirt, that means goods. So goods means purchases. So purchases account is to be credited. So to purchases account 12,000 rupees. The narration is goods taken over for the personal use. The next transaction is goods tablecloths used for office use. Saree distributed as free samples 3,000 rupees. Listen, we already know very well Anand dealing textile business, right? So he provides sarees for free samples to promote his business, or he promote his product. Okay, you know very well that if they given saree for free samples here, okay, from that they generate more revenue. From the free sample they generate more revenue. They can increase their sales through the free sample. So Anand provides saree as a free sample to promote his company or to promote his product. Okay, so whenever a company provides its product as a free sample, that is called as free promotion. Okay, or called it as the sales promotion. We called it as an, otherwise we call it as a kind of advertisement. So sales promotion is a kind of expenses. All the expenses is to be debited. So sales promotion accounted are 3,000 rupees. And here goods goes out, right? So purchases account is to be credited 3,000 rupees. Narration is goods distributed as a free samples. The next transaction is goods tablecloths used for office use 200 rupees. Here goods taken for the office use. Here they have taken goods for office use. Goods means what? Purchases. Okay. So what are the accounts are affected here? Two accounts are affected here, that is goods accounts and the office use account, which means office expenses account. Okay, so because they have taken goods for office expenses. Okay, so whatever office expenses is a kind of expenses, so all the expenses is to be debited. So office expenses accounted are 200 rupees. So whenever goods goes out but it can't return as a cash, okay, then that goods is considered as a purchases. So purchases account is to be credited. So office account debtor 200 rupees to purchases account 200 rupees. The narration is goods used for office use. So from the seventh transaction, listen, from the seventh transaction onwards, everything is related to goods. So whenever the goods goes out and then it can't be returned as a cash, then we have to consider that goods as we purchased. Okay, so purchases account. Okay, thank you.